Money, Power, and Monetary Regimes by Pavlina Tcherneva. Counterfeiting. The case of the U.S. colonies' pursuit of independence is similar in many ways. Having political sovereignty necessarily meant acquiring monetary sovereignty as well, a process which the British forces tried to undermine unsuccessfully through currency counterfeiting, that is, a method of financial warfare. Economists have no theory of counterfeiting, because money is seen as a medium of exchange emerging from barter. The very limited writing on counterfeiting only examines the question of whether it may be efficient. In general, counterfeiting is treated as a marginal and unimportant phenomenon that is not theorized. The process of political independence of the U.S. colonies went hand in hand with the process of monetary independence. As soon as the colonies declared independence and started the Revolutionary War, they began issuing their own currency to finance the war effort. The overissuance of continentals is often used as an example of currency mismanagement by governments, leading to the swift depreciation of fiat currency from overspending. And while it is true that financing the Revolutionary War required the colonies to increase their spending at a rapid rate, a much underappreciated fact is that the depreciation was much more the result of counterfeiting than overspending. Footnote 6. The Continental Congress had issued a massive amount of notes to finance the war, and some depreciation would have likely occurred anyway, but probably not enough to cause the total demise of the continental currency. Currency issue in the U.S. colonies began 85 years before independence, as the colonies understood the need to emit the very thing that circulated within the colony for settlement of private and public debts. These currency experiments worked reasonably well and gave the colonies significant economic independence, which prompted the British Empire to retaliate with the Currency Acts of 1751 and 1764, prohibiting the issue of new currency by the colonies. As soon as war was declared, colonies began to issue notes again, which they believed was their sovereign right. Several months before the war, however, British forces as well as Crown loyalists in the Americas flooded the colonies with counterfeit notes. As Rhodes, 2012, put it, on the eve of the Revolution, American counterfeiting had surpassed British imperialism as the #1 threat to colonial currency. End quote. After independence, the various attempts at launching a unified national and exclusive currency failed when President Jackson vetoed the recharter the Second Bank of the United States. Simultaneously, notes issued by individual states proliferated, and so did private counterfeiting. State-chartered banknotes multiplied to 10,000 different kinds, 6,000 of which were regularly falsified. When Lincoln's Legal Tender Act of 1862 designated the greenback as the national currency, counterfeiting remained widespread, even though it now carried significantly greater risks. The American colonies initially failed to crack down on northern printers. Eventually, the Treasury, established in 1789, began prosecuting counterfeiting of national currency with the full force of the law. But it took a while to perfect the law enforcement process. In 1865, the Secret Service, authorized by Lincoln, was created precisely for the defense of this exclusive sovereign power to issue the national currency, and was charged with cracking down on counterfeiting. Benjamin Franklin recognized that, as much as issuing one's own currency is a prerequisite for sovereignty and independent internal policy, counterfeiting was an act of war against the sovereign. Sabotaging the exclusive prerogative to issue the currency was done by devaluing it via massive overissuance and by the inability to distinguish between the sovereign and counterfeit notes. Counterfeiting as an act of war has been used in other cases. Such are the cases of government-sponsored counterfeiting in German Reichsmarks by the British during World War I, of US dollars by Stalin in the interwar period, of British notes by Hitler during World War II, and of the Vietnamese and Cuban currency by the US during the Vietnam War, and the failed Bay of Pigs invasion, respectively. Revisiting stories of counterfeiting makes for tantalizing reading, but they are theoretically important. As long as money has existed, so has counterfeiting. Numismatic work shows that counterfeiting of coins emerged as soon as the oldest coin was struck in Lydia, 7th century BCE, via clipping, shaving off, or melting, and all were punishable by death. Counterfeiting was a problem in non-metallic money too. Indeed, capital punishment for forgery of banknotes was part of the legal code in England as late as the 18th century. This is why, for example, the split tally stick had such an original design to avoid it. In medieval Europe, taxes were often levied in the form of wooden tallies. Thereby, the payments were recorded with notches on the stick that was then split in half, lengthwise. This way, the two halves both recorded the same notches, and the tax-paying serf kept one as proof of his tax payment. Clay tablets were also difficult to forge, as they represented detailed and complex schedules of tax assessments and payments, other debt obligations, and price equivalences. But it is likely that there have been attempts to tamper with their value as well, which necessitated the creation of the bulla, a seal where clay tokens were stored. The image face value of the clay tokens was often imprinted on the wet surface of the clay seal, the bulla, before it dried, to ensure that once the seal was broken to make payment, the value contained inside matched exactly the value claimed by the payee. In other words, for most of known history, as long as money has existed as a creature of the state, private interests have wanted to manipulate its value. That is, a history of counterfeiting is a history of money as a creature of the state. It is a history of the ability of an authority to impose non-reciprocal obligations, set the unit of account for their payment, and enforce them. In the modern context, it is also a story of establishing a unified national currency for the purposes of independently conducting a nation's domestic affairs. Because economic theory does not recognize money as a creature of the state, it also has under-theorized the importance of monetary sovereignty. Economists see counterfeiting as an irregularity from generally smooth functioning markets. If, however, money is correctly considered as a creature of the state, then counterfeiting becomes a pervasive private sector market phenomenon that requires theorization. And as long as money has been a public good, the responsibility for both maintaining its purchasing power and for providing it in a manner consistent with domestic goals has rested with the government.